Hello, I'm Dr. Jeff from The Standard. Last week, the Hong Kong stock market underwent a deep correction. It fell from the peak 30,000 level to close at 28,283. That means it fell about 1,700 points in the last few days. And actually, there's a few reasons behind. First, Xinhua Agency, the Chinese government media, had announced that the China's electric car industry seems developed too fast and some bubble has been created. Second reason, Chinese New Year is coming. The holiday will start on 12th of February. That means only 2 weeks from now. So normally, people will like to sell stock, raise some money, and have a happy new year. Third reason, the US market is a bit too hot recently. Many retail investors has participated. So I will talk with you about the story of GameStop later. Actually, it's a story about investor pushing up a shares, while at the same time, hedge fund manager try to sell it to make money. And who is the winner, I will tell you later. And the fourth factor I would like to mention is the IPO in Hong Kong. It has freed around 600 billion Hong Kong dollar in the IPO subscription. So the liquidity is a little bit dry up for the time being. But overall, the picture is not that bad. In last few days, even though the Hong Kong stock market dropped, there are still money inflow from Shenzhen and Shanghai, every day over 10 billion renminbi. And as you can see, the Bitcoin price, it fell from 41,000 level to 29,500. But recently, it went up again to 34,000. So you can see money is still there, but they just want to take some profit when the underlying asset rises too much and try to shift to others. So this is a kind of rotation that we can see. So at the same time, I want to show you three charts. First one is the US dollar chart. The US dollar index fell from 94 to 89 in the last few months. So in general, US dollar weakness will continue. And I'm afraid that it will rise to 91 or even 92 level. In that case, it will not be good to the stock market for a time in a short time, because US dollar index rise, that means some money is flowing back to US. It is not good to emerging market and the Asia Pacific market stock. Another reason, the second chart I want to show you is a Hang Seng Index chart. It's a daily chart. It fell below the 10 days moving average and also the 20 days moving average. So it is likely to test the 50 days moving average, which is at 27383 now. But I don't think it will go down to test the 100-day moving average, which is at 26035 now. So the downside for Hang Seng Index is around less than 900 points, because 50 days moving average is going up every day. So I think in the coming 1 or 2 weeks, we may be able to see another 900 points correction, but that's healthy. The third chart I want to show you is the Dow Jones Index. So the US stock market is relatively more volatile. So I want to show you the weekly chart instead of the daily chart. So you can see from the weekly chart, since last year, the market bottom in March, the Dow Jones Index keep rising with a very good support at the 20 weeks moving average. So last November, it once fell below that, but soon recover. So now the 20-week moving average is at around 29,300. And the index last Thursday closing was 30,600. That means Dow Jones Index may have a downside around 1,300 points, which is equivalent to a 4%. Not much, but it is a healthy correction. So I would suggest coming 1 to 2 weeks. Keep patience, enjoy the Chinese New Year holiday, and wait for a better level to buy Hong Kong and US stock. Before talking about the GameStop share frenzy, so I would like to talk about what happened in the Hong Kong retail online market. So under the COVID-19 pandemic, people are spending more time at home, and the global stock market has kept rising since last March, and many stock market index hit a record high. And about around 2 years ago, some low commission or even zero commission securities firms come to Hong Kong. They try to attract people to open account. Once you open account, you can receive 1 share of HSBC or 1 share of tracker fund, or even 1 share of 10 cents. So depend on different at what time you open. So this attract a large number of people to open an online trading account. And once they open, even though initially you may not have interest to invest, but as you can see the market keep going up, you can see other people is making money. So gradually you may have give some test to invest a little bit. Once you make money, so you invest more, and you buy more and trade more often, because it's very low commission or even free commission. So this is happening last year. And well, what is the outcome? First, traditional securities firms and the bank's security department, they are suffering. They lost a lot of clients and assets to these online brokers. And people don't want to pay the 0.25 commission to the Hong Kong brokers anymore. So it's a very tough industry. And second, people would like to join the online checking group, because once you have an online broker account, usually they have a chat group that you can choose to join or not join. If you don't want to join the broker's chat group account, you can join the KOL or YouTuber. There are so many KOL and YouTuber nowadays analyzing the stock market. So you can join their group, or you can pay even monthly subscription fee to receive information. So gradually, there are many groups of stock speculators in the chat groups, and they share information and they buy the shares together. That is a big change. So let's talk about the US online broker market. Last year, how many new accounts was opened? The answer is 10 million. And most of them are young people, aged 20 to 30 years old. So this is a very big potential market. They also have a very popular online stock forum. So they can go there and discuss about the stock market, to exchange information, and most of the time buy shares together. It was called Reddit, Wall Street Next, WSN. And actually they chose a share called GameStop. And this share was not that exciting. It sells video in a shop. So nowadays there's no need for us to go to a shop to buy video games. We only need to download in the Apple App Store at home and then play the game. So GameStop business was not that good. Last year it lost 670 million, and the year before lost 410 million. And it faced a fierce competition from PlayStation 5 and Xbox. And since it is suffering a loss, there's low PE ratio. Okay, but what happened to its share price? 2 weeks ago, it was $20. Last Thursday, it was 483, went up 23 times in 2 weeks. this kind of rise, I would say, is insane. But people said, no, it's not crazy. It's a story. It's a Bible story. David's victory over Goliath. And the blue ocean retail online stock investors defeated the big names who short sell the shares. That means those hedge fund managers. So what is the trigger point to buy this share? Actually, this company has 3 new directors. One of them is called Ryan Cohen, who has a long experience in the e-commerce industry. And people expect after he joined the company, he can transform the company into a more digitally focused company. So this is the reason why they recommend. But the hedge fund manager, the Citron Research, whose founder is Andrew Leff, write a report saying that the company share price is now $40, but it only worth $20. So he recommend people to short sell. Okay, when investors in the Reddit forum saw this news, they just, of course, they did not agree with this report. So they asked people in the forum to buy together. And actually, it proved that they are right, because they are much more powerful than the short sell hedge fund managers. Why is this happen? Okay, let's look at the figures. The market cap of GameStop is $13 million. Okay, assume an investor invests $10,000. How many investors is needed to buy the whole issue of GameStop? The answer is only 1.3 million. 1.3 million investors, each one paying 10,000, can buy the whole issue. So how can hedge fund manager buck the trend? Because last year, 10 million people open account. And Robinhood, each day, has about 3.8 million account user to log into the account to trade stocks. So you can see the difference. You can see how big the individual's power was nowadays. And hedge fund manager has overlooked this kind of data, and they suffer a big loss. It was said that Melvin Capital and Citron Research has lost as many as $5 billion in last 2 weeks in short selling GameStop shares. It is a good lesson for them. Last Thursday, something unfair happened. Robinhood and other online broker stopped the individual investor from buying GameStop shares, but they still let the institutional investors to freely buy and sell the shares. So that is ridiculous and unfair. GameStop price fell from 483 to as low as 112.25. Those investors, individuals, can only sell their holdings, but cannot buy the shares. Then share price went up from 112.25 to $318. Again, individuals cannot buy, but at the same time, hedge fund can buy. They can square their position, or they can buy the share and sell the share and make money. So I think this is really ridiculous. And actually, there are many other stocks. In the last few weeks, the share price went up a lot, and again was being interrupted on the same day. They include AMC, BlackBerry, Bed Bath & Beyond, Express, Kohl's, Naked Brand, and Nokia. So individuals can only sell their holding if they have, but cannot buy the shares. So all of them, the share price dropped a lot. So this is actually a kind of market manipulation, violating customer agreement. and financial industry rules. So the US Senate immediately said it will hold a hearings and then investigate the situation. And Nancy Pelosi, the Speaker of the United States House of Reps, said the Congress will investigate this short-selling incident and described the incident as interesting. Well, personally, I don't think this is interesting. This is absolutely unfair treatment, and this is violating the trading rules. So SEC and those online brokers, Robinhood, they owe the individual investors an explanation and justification and an apology.